Based on the results of the survey, we have found that ETF usage is becoming increasingly mainstream within traditional asset classes. In particular, in 2019, up to 91% of respondents used ETFs to invest in equities, which compares to a mere 45% in 2006. Similar situation applies to bond ETF. For sovereign bond ETF, their usage went from 13% to 66%, and for corporate bond ETFs, it went from 6% all the way up to 68%. In parallel, the role of ETFs is becoming more tactical. For the first time, the use of ETF for tactical asset allocation was higher at 53% than the use of ETF for long-term buy and hold decisions at 51%. This more balanced usage suggests that the ETF market is maturing and users are becoming more active in their use of ETFs. Achieving broad market exposure remains at the top of the list, with 73% of respondents using ETF frequently for this purpose. However, sub-segment allocations have also risen, potentially reflecting the increasingly tactical role of ETFs in the portfolio. Improving performance is the main motivation for using smart beta and factor investing strategies, followed by managing risk at the total portfolio level on the one hand, and also managing exposure to risk factors on the other hand. In parallel, the percentage of respondents that already invest or that are considering investing in smart beta and factor investing looking forward keeps increasing in 2019. In particular, if we look at the results compared to 2013, where only 28% of respondents were actually investing in those strategies, we find in 2019 that this number has increased all the way up to 51%. This very trend is confirmed by looking at those who said that they were not considering investing, where the number went down from 36% to 21% in 2019. Regarding the wrappers used to invest in smart beta and factor investing solutions, we find that 61% of the respondents use active solutions, while 55% use ETF and index funds, and 20% use dedicated mandates. In terms of future developments, we find that 31% of respondents want to see more socially responsible investing-based ETFs. Additionally, for ETF related to multi-factor and smart beta indices, we see an interest in more development in those areas for 30% and 28% respectively. When asked about smart beta solutions, the respondents think that further developments are needed in the fixed income, SRI, and alternative asset class fields. They also would like more customized solutions to be developed. Looking forward, we expect financial innovation and the development of new products that correspond to these demands and requirements from investors would lead to an even wider adoption of smart beta solutions.